Hello, I'm Peter Towers, Managing Director of ESS BIZTOOLS. Welcome to this overview on crowdsourced funding equity raising. Is it for you? Accountants have had the opportunity now for 3.5 years to help their clients raise capital. Because in Australia, raising loan funds brings a requirement to produce security, and many fast-growing businesses haven't got spare assets that they can offer as security to a lender. Also involves personal guarantees being issued by directors and in some cases the leadership team of a company. And there's the monthly repayments of principal and interest that have to be paid. The government was very much aware that this was causing businesses not to start or not to expand. So very wisely, they introduced crowdsourced funding equity raising to assist companies who have a vision, have a capable board of directors and a leadership team with a burning desire to succeed, to be able to raise capital. The sum of capital that can be raised is $5 million in 12 months by the issue of ordinary shares in the company. It's not a loan. These investors end up owning a percentage of the company. But what it does, it gives the company, which is normally cash-starved, some very valuable funding that they can then use to undertake further research and development, to commercialize a new product or process or service that they have developed, to acquire some other businesses that will help them further their expansion into a larger market. So there's a lot of beneficial activities that can be generated by the company being able to raise some funds. I think this is a great way for an accounting firm to help your SME clients. Inquire from them as to whether they are looking to expand, and then ask them the lead question: where are they going to get the money from? Even someone that's scaling up their operations, they're currently running a business with a turnover of $2 million and they want to go to $7 million in 3 years, will undoubtedly find they need additional funds. Why? Because of the investment that's required into stock and debtors, perhaps some training, perhaps research and development activities to finalize the development of their new product or service. Or they might need some additional plant and equipment or a new building. It all costs money. And what a lot of people don't realize is that even though you're trading at a profit because you're expanding your business, you haven't got any cash because there's money owed to the company. The debtors have doubled or trebled. The investment that the business has to make in stock has grown. And we've got the other outlays, especially if there's more research and development being conducted. So this is where crowdsourced funding equity raising comes in. The company is able to get these funds to be able to expand its business. Admittedly, a percentage of the company has been allocated to those new investors. But that's the way private enterprise was established. It was the way the British Empire expanded its commercial operations all around the globe 350, 400 years ago. That's when it all started. So why shouldn't you be helping your clients to do likewise now in 2022? About 12 months ago, the Commonwealth Bank's Accounting Market Pulse report identified that they had surveyed accountancy practitioners all over Australia, small firms, medium-sized firms, large firms, top 100 firms, and it asked them a series of questions. One of the questions was, are you going to diversify? And the official response in the document produced by the CommBank team was that all but 5% of the firms that they approached indicated they were not going to diversify in the next 2 years, 21 and 2022. So that meant that 95% of the accountancy firms that they spoke to indicated they would be diversifying their services. Were you one of those ones that gave that reply to the CommBank's consultants? And if so, what have you done about it? Or alternatively, were you one of the many firms that read that report when it was released in May 2021 and decided that that could be part of your strategy? And perhaps because of COVID-19 and other issues, you haven't quite done it. But don't give up, because I think you will find it's a great benefit to your accounting firm if you are able to help your clients by diversifying your services. And it will definitely help your team, because your team members, your accountants, are looking for interesting and challenging work to undertake. So in the first instance, you need to ask your clients some questions. Were they looking to get some business funding in the last 12 months? How did they go? Were they successful? And then find out if their turnover is under $25 million annually, if their gross value of assets is under $25 million. Just got confirmation that they're not registered on a stock exchange anywhere in the world. Are they a private company or an unlisted public company? Do they have a sound business relationship with their customers? Have they got a vision? Have they got a leadership team that can implement that vision and take them to a higher height than what they currently are performing at? Do they have a good social media presence? Is the whole team capable of implementation? Because that's the big challenge. If so, they could be eligible for crowdsourced funding equity raising, and they could raise up to $5 million in 12 months. But if they only elect to raise $1 million initially, that's okay. They can always come back later in that year and raise an additional $4 million. Obviously, the market's got to support them, and the crowdsourced funding intermediary has got to inspect the documents and be happy with it. $157 million has been raised in the last 3.5 years from crowdsourced funding equity raising in Australia, and it's starting to take off a lot better than what it had been. There was $10 million raised in the 3 months in the March quarter, which represented an 89% increase of what happened in 2021. And the capital raising's being achieved by all sorts of businesses. 3 of them in this period were a Gold Coast brewer. There's no doubt that liquor is a very popular activity for investors to support, but also a hot sauce brand. I don't know how good it tastes, but it sounds good, doesn't it? A hot sauce brand. And an adventure apparel manufacturer. Now, between the 3 of them, they raised $4,525,000 from the public. The apparel manufacturer raised the $1,525,000, and I note that they raised that within 3 days. Under the legislation, there's 90 days to raise the sum once you've started, but they raised it all in 3 days. A great effort. The managing director of Virtual, one of the leading crowdsourced funding intermediaries, has indicated that total funding already in this financial year exceeds 57 million, and 65 companies have been successful. That's double the funding that was achieved in the same period last year. Crowdsourced funding has fast become an efficient and effective mechanism for companies to raise capital from their most passionate customers and fans, Matt Vitale indicated. And that's great. That's setting the scene. That's the benefit for your clients. What's in it for accountants? What's in it for your firm? I think there's a lot. Because no one can raise crowdsourced funding, equity raising, or literally any sort of money, whether it's a loan or a capital raising under Section 708 of the Corporations Act, or an early stage innovation company capital raising. Most definitely, if you want to go and talk to a venture capitalist, you're going to need the documents that I'm about to refer to. So these companies need a business plan, at least for the next 3 years, that really spells out their vision. And it's been designed to suit this particular company, not just copied off someone else and the name change. They then need predictive accounting reports. Predictive accounting reports are budgets, cash flow forecasts, and projected balance sheets that link back to the vision contained within the business plan. Not just something prepared quite arbitrarily at arm's length with no interaction. The business plan sets it out in words. The predictive accounting reports paints the financial picture in money, so that a company director can sign off on the business plan and then see what the financial effect will be. Obviously, they've got to perform to the turnover, the gross profit percentages, the productivity figures that are contained within the business plan, but it gives them a guide. If they can do that and implement that and restrict their expenditure to what's contained within the cash flow forecast, this is what their position will be like in 3 years' time or whatever longer period. But they also need a business valuation. What's their company worth in its current position? Now, they might be a new business. A lot of the companies raising capital as crowdsourced funding, equity raising, and new businesses. So what's the projected future earnings of this company going to be? And then we need to discount it back to a present value. And then you need to prepare a report to go to the directors to say to them, based on this series of forecasts, the business plan, the budgets, cash flow forecasts, and projected balance sheets, the business valuation, we believe if you want to raise $1 million from the market, you will need to allocate to them the following percentage of the company to those investors. And once you've convinced the directors to sign off on that, that information then has to be submitted to the crowdsourced funding intermediary, who also has to accept that it is fair and reasonable. Because the intermediary wears two hats. One hat is he is the official representative of the Australian Security Investment Commission under the legislation. The intermediary has to sign off that the company is accepted as being a crowdsourced funding equity raising company to be able to be listed on the intermediary's website, where the public can go and read the material and then decide whether they wish to invest. They complete the application form for shares and they do all the transactions with the intermediary. And that then relates to the second hat that the intermediary is wearing, because they are a broker able to talk to potential investors. Now, one of the intermediaries claims that they have 50,000 people listed on their prospect list as potential investors. Most of the other intermediaries talk about 25 to 30,000. It's still a lot of people. And what they want to do is protect their credibility. So they're not going to go out and support any company raising capital if they're not happy with the total document, which is now reflected in the crowdsourced funding offer document. That's the legal document, the equivalent of a prospectus for a public company capital raising, that a crowdsourced funding equity raising company has to produce. Oh, sorry, guess what? You, as the accountant, will undoubtedly be the key person in producing those documents. And you will charge a fee for that, obviously. And I think when you sit down and do the sums, you will find that it's a attractive fee for services, and there's a significant amount of interesting and challenging work contained within that assignment that many of your younger accountants could be involved in. I think this is the way that you should be looking at crowdsourced funding equity raising. It wins on 3 fronts. It's a great service to help your SME clients. And I think accountants should be claiming the ownership of this very important mentoring and coaching role in assisting SMEs. We should not be standing by and letting any other profession grab this. But if we're not careful and we do not continue to promote this service, other people, other advisors will grab the lion's share of this. So accountants need to show that we want this. Secondly, your team will then have interesting and challenging work. Accountants Daily ran an article in December which indicated that 70% of employed accountants were looking around to see what else was on offer. And many of them had indicated that they were bored with just doing tax return work for 45 weeks of the year. And frankly, I can't blame them. Andrew Geddes, the most senior accounting advisor in Australia, in my opinion, most capable one, who's advised hundreds of accountancy firms around Australia, I think hit the nail on the head in a podcast that I prepared with him in December, when Andrews criticised partners in accountancy firms and said, you need to be more responsive to your younger accounting team. They've been to university, they've done their PY or CPA entrance courses, and they're now wanting to understand the real world. You have to take them with you into client boardrooms, into client meetings with the CEOs or the managing directors, so they get a clear understanding of what's involved. And you have to be giving them interesting and challenging work. Now, as the economy turns round, and obviously the government's expecting this, the opposition leader mightn't have known that unemployment was 4%, but I think most accountants do, and most business people do. Unemployment is expected to go to 3.75% according to the Federal Treasurer. And that's going to mean that business is going to be vibrant, exciting, and glamorous, not like it's been for the last 2.5 years. And that's going to mean that a lot of your younger accountants are very employable in that market. So I think you owe it to them, but also to yourself, of course, to be looking at interesting and varied ways, new ways that you can generate revenue quite legally within your firms. And what you're doing really is just extending the services that you've been offering to SMEs for years. You're going to help them to be able to raise capital quite legally under the Corporations Act in Australia. ESS BIZTOOLS has developed a complete product package to assist you to be able to guide and assist your clients to understand what crowdsourced funding equity raising is all about. We then have in the package templates to assist you to prepare all the documentation that's required. We have templates on who the intermediaries are. There's 16 of them in Australia that have received licenses from ASIC. We have their names, addresses, telephone numbers, websites, all that for you. So you can do some research on them. But I'll tell you now, 2 are leading the market quite considerably. They've got about 85, 86% share of the market. There are 2 others that are trying to get going, and there's 1 or 2 others doing a little bit. Unfortunately, the rest are sitting on the sidelines as I see it, and they will complain there's not enough overall deal flow. I wonder why. The 2 top intermediaries have indicated that they only interview 5% of the people who approach them. And I've done the sums based on the figures they've released. The 95% that they did not do anything with, other than told them they weren't interested, amounted to 1,540 companies in 2020-21. I don't know what it currently is. They haven't released updated figures. 1,540 companies went and knocked on the door of intermediaries and were told, we're not interested. Why? I spoke to Andrew Geddes about this in a podcast that we prepared at the time that information was released in October last year. And Andrew believes it's because too many accountants have put up the banner on your offices and on your websites that you're only interested in taxation. I hope Andrew's wrong for once. And there's another reason. But this is a lot of work that you could have attracted to your firms. Sure, some of that 1,540 would not have been suitable. But did they go off to talk to an intermediary because they thought their accountants were only interested in doing tax? That's the question. And I think that's a challenge if accountants want to really control this space and be the key advisors to SMEs who are seeking to raise capital. I hope you agree with me. It's a target worth applying for and making sure accountants keep control of it. Because I think this market, raising crowdsourced funding, equity raising, will be very substantial in the future. I've been told that in the United Kingdom, currently, crowdsourced funding equity raising supplies 26.6% of the total funding for SMEs in the United Kingdom. That's bank overdrafts, bank loans, debtors finance, all thrown in with crowdsourced funding equity raising, which has a different name in the UK. They've been running this in the UK for 6.5 years, longer than Australia. I think there's some great stories to tell them that are going to emerge in the future. So the challenge to accountancy firms is, are you going to stay doing tax returns as that market, I think, is going to decrease around you because of technology and because of outsourcing and because of competitive pressures? You have the opportunity with your business clients to be able to offer them a broader range of services. Crowdsourced funding equity raising, I think, is one of the most important ones. Please grab it. Please go to our website, www.essbiztools.com.au, where you can look at the material that we have produced to give you every opportunity to be able to earn fees from supplying these services to your clients. And if you would like to have a conversation with me, please ring me, 1-800-232-088, and we'll set up a Zoom meeting, 45 minutes, no obligation. You tell me a bit about your firm, tell me a bit about your clients, tell me the team you've got, and I will give you an overview of what I think the products you should be using to start the journey of introducing business advisory services, in particular crowdsourced funding equity raising, for those clients who are interested in it. And it won't be all of them, I assure you of that. But on the journey for supplying a broader range of services to your clients. My number, once again, 1-800-232-088. Stay safe. Have a great day. Goodbye.